Happy Wednesday, everybody. Believe it or not, it is June 9th. Can't believe we're here, Ken.
It's going by fast.
It's just incredible. For those that have been following the live streams, they know that Ken and I are both fans of gardening. And I have this bamboo plant in my yard. It's about 15 feet tall right now. And it's one of those bamboos that come back every year. It's actually an invasive species, but it's gorgeous. I love it. I got to fight it. But yeah, we are in full swing right now.
So that reminds me, I have picked cucumbers, summer squash, zucchini, and I've gotten my first cherry tomatoes and peas already this year. I got green beans probably by next week.
Wow, that's incredible. Hey, should we do a separate gardening show?
Yeah, we could do gardening with Ken and Wes.
I love it. Hey, and for everyone that's tuning in today, we're going to be talking about overages. So it's a really important conversation when it comes to flat rate, that this whole idea of the idea that you're not charging for additional pages as you would. So we're going to be talking about that today. But before we get into that, remember, as you're watching on Facebook, on LinkedIn, or on YouTube, you can actually post your comments live. So do that. If you're in the Facebook group, you might want to tag your name if you want us to know who you are, because it doesn't show the the details for that. Completely up to you. You might want to be anonymous depending on what you're going to say, but make sure you leave your comments and questions for us throughout the live stream.
And they could start by letting us know that you can hear us okay. We want to make sure that we are live on all those platforms. And then secondly, let us know where you're watching from. We always like to understand what parts of the world our audience comes from.
Absolutely. And we have customers from around the world. So this really is a global movement. We've talked about that. The number of countries that this is taking off in is absolutely astounding. So whether you're in the US, in Canada, France, Germany, Australia, South America, just let us know where you are. And hey, Ken, I got the little news banner down there today. So got a couple of things. The one I'll start with is it's official. We'll be talking about flat rate at the BTA event in Asheville coming this October. So that'll actually be my first trip in about a year and a half, if you can believe that. And unlike everyone else in this space, we generally travel at least a couple times a month, right? And first trip in a year and a half. So,
yeah, well, I'm getting ready. My first trip's coming up. That's why my cruise back down. I'm actually getting myself in the mood. I got a cruise coming up, but I too will be at Asheville, and I'm going to be talking about business planning and the value of that at Asheville. And so we're both looking forward to being there. Asheville's beautiful. Hopefully this year it's interesting. The event is called Fall Colors, and I'm hoping we hit the fall colors, because they have to set the event date way before we know when the colors are going to change.
It's so true. And I think I'm probably going to go there a day or two early. I got to check my wife's calendar to see if we can get there. But yeah, it is an absolutely beautiful place. So if you're going to be there, I'm just narrowing down my topic now, but I will probably be speaking on both deal crafting, sort of looking at how you can craft the deals, and also sales rep compensation. So for those that attend that, they will get a complimentary version of the calculator that we charge for with our customers. So make sure that if you're going to Asheville, that you come by and say hello and get you set up for that. Hey, other big news, Ken. KM, what's going on there?
Well, KM has been very definitely selling off a lot of their branches. It's interesting. I saw in the news yesterday that Dex had acquired, and I didn't read the article to see how many, but Dex has acquired a chunk of their branches. POA has acquired some. A big dealer in the Colorado area has acquired some, and I think we're going to see more and more of this. And it looks to me like, and what I've read is that with the management change, there seems to be a change in focus. And I think what we may see, this is my best educated guess based on what I've read, is that they're going to retain some of the major markets and some of the major production print opportunities, but it looks to me like they're kind of pulling back from the rural areas, small towns, and maybe. And we saw this with Rico happen, that they got out of the of the small businesses. They just didn't want the SMB space, that it was not cost effective for them to manage. Part of it
Yeah.
is, well, there's just lots of factors.
Yeah, I think the pandemic probably had quite a bit to do with it as well. That people have had to reimagine what they look like as companies going forward, right? So, one thing that we know, pages are not going to be increasing. That's for sure. They may come to close or at sort of pre-pandemic levels, but there's certainly no new reason to print. But when you did mention the production print area, that's obviously still a strong growing area, which is nice to see.
Yeah.
One of the things I love, you shared with me a quote, which I thought was awesome on the Purple Cow, and I'm going to put this one up here now. And when we talk with people about flat rate, really, that there are some minor things that make a huge difference to customers, and we'll actually talk about that after this, Ken, because I know that one of our partners, had a really good story to share about this very thing, right?
Yeah.
And so you can see from the quote that it's the key to success is to find a way to stand out, to be the one purple cow in a field of monochrome Holsteins. And Seth Godin, with that purple cow story, I just love it. I know I use it and abuse it, but it really, for what we're doing in the flat rate world, it just sums it up perfectly, right? And so speaking of purple cows, you were sharing a story. We're under NDA with all of our clients and partners, by the way, so we don't mention names, but maybe talk about a little story that you came by about a purple cow.
Well, it was quite interesting. Like I said, a friend of ours was telling me that he was in a client recently and had quoted out, a conventional offer for, a conventional offer, lease and cost per copy.
Yep.
And built in all of the expenses, and then basically talked to the person he was dealing with and said, listen, I could offer you a flat rate option for X dollars more. And the person didn't even blink, said, I'll take the flat rate option. So here he had baked in all of what he thought he needed in service revenue for the agreement. Now he just added extra. And it's kind of interesting because that ties into our discussion today.
It does. Yeah, and it's a really important story because, again, tied to that purple cow, that it was a very small thing, right? Being able to the customer to have that fixed flat monthly bill, and that they were willing to pay more for that, right?
Yeah,
because it was more important for them to have that fixed, flat monthly bill. And what I love about that, story too, Ken, is that, for everyone that's watching this, if you're offering flat rate, it does not mean that you can't go after a traditional deal and offer cost per page. But how nice would it be to go into an RFP or to go to a customer that's looking for, 3 cost per page quotes and give them what they asked for, and then come to them with this alternatives. And we've also got a flat rate program. Here's how it works. And, you talk about a purple cow standing out in that, field of monochrome Holsteins right now. It is absolutely a winning formula. I just love it.
Oh, like I said, we've talked about it, and like I said, we talk about it to death, but it stops this race to the bottom, because when you're the only one with a purple cow, you don't have to. Well, actually, if you're the only one with a purple cow, you have the cheapest purple cow.
Yes,
because you don't have to compete against the monochrome Holsteins. You have a purple cow, and it's cheapest because you're the only one. You
got the only one in your market, and that's not going to last forever, right? So I was speaking with another partner friend of mine, and some dealers are holding off until they see other people doing it, right? And I would argue that that's probably not the right strategy if you want to get the the land share, right? Because it's just like investing in stocks. By the time you hear a tip, it's already too late. The majority of the money has already been made, right? So if you're going to do this, take that market share that you can right now, right? And I get more confident, Ken, every single day that we're doing this. Like last week, we signed up how many new customers?
One for sure, and I think we got 2. So there we go.
So I'm telling you, it is, it's happening. So Ken and I are very busy right now. This is not something that we're hoping happens. It's happening right now. So don't wait for other people to start doing it. Get on board. And looks like we had somebody new come in. So hello there, somebody new.
Okay, and I wanted to add something to that. because you talked about the land rush. And so if we think back about in fact, the nickname for Oklahoma is the Sooner State, because back before late 1800s, they had a land rush there where people could go out and stake out, and they had like a starting line, and whoever got there sooner got the best land. And so in your market, if you're there sooner,
You get the best customers.
I couldn't help the pun.
Yeah.
Then you get to take out the best spots. And
Right.
so this is not a thing that you want to wait and see if it does it work, because we know it works. This is something that you want to lead the charge instead of following the pack.
Absolutely correct. And, Ken, we shared a lot of good learning for free with our 10-day challenge, and members have access to that. We charge typically $239 for access to that. But right now you can get it for free. And for free, I know it sounds like an infomercial, but it's not. And actually, I'm going to put something up here. Here's how you can get it for free. All right. So the MPSA, the Managed Print Service Association, one of our partners, actually has a coupon code. If you're a member with the MPSA, you can get access to that coupon code and get access to the 10-day challenge for free. And I'm not sure if everyone can see it. I'm actually going to try and blow this thing up full size so you can see a little better. Maybe hide my overlay. Let's see how I can do that. Sorry, everybody. This is the problem with live. Oh, we're getting there. One more. Let's hide it. Okay. So membership for dealers is only $200 a year. And to top it off, it's actually 6 months for free. So, you combine that, this free access that we're giving to the 10-day challenge with the coupon code just for being a member, you're actually saving money. Like, you're not just netting zero, you're saving money. So $200 a year for the membership basically disappears with that coupon code, and you get access to the 10-day challenge. And Ken, as you know, the 10-day challenge that we did is absolutely full of valuable stuff that we do in our consulting practice that we help people with, right? So for those
absolutely.
those that are looking to either brush up on their own, program or whatever. So check it out. I'm going to get our overlay back here. All right, go back to banners, and next one. Let's talk about overages. So this is one that comes up every single time we talk to dealers, especially when they're sitting on the fence. And Ken, what I've discovered lately is that when a lot of dealers, when they're showing hesitancy towards a flat rate model, it's overages that really has them most concerned, right?
Yeah, they're going to print 1 million copies.
Yeah. Nonetheless, there are ways to deal with this. So in the traditional world, actually, I'll put up the graphic here and we can kind of, speak to that. All right. And Ken, maybe you can speak to that first one a bit. Like, what's the difference between a benchmark and a minimum?
Well, a benchmark is what we based what we based the contract on. And there's a couple of factors I'll talk about in here with those benchmarks. Is first of all, quarterly business reviews. Because if you're doing your QBRs, you have an opportunity to make adjustments up and down in the agreement if there's a significant difference. And the other thing to think about, and this is what so many people miss, is that if you have implemented rules-based printing properly, the odds are that their volumes are going to go down, and you may at some point in time decide, to be fair to the customer, that you have to lower the price because their print volume has declined. It is an exception that somebody goes over, in a significant manner. But that's what the QBR gives you the opportunity to make the adjustment.
Yeah, it absolutely does. And, with these benchmarks as well, is it just really lets everyone, that's in the flat rate contract understand where you're starting from, right? And I love what you say, that as long as you know what those numbers are, once we get those benchmarks, then the odds of people actually going over, again, as we talked about, there's no new reason to print. So as long as we understand what their print behavior looks like on a normal day, then, these benchmarks are usually enough. And I'm going to put that caveat in there because I think you still need to have some contract elements in place to be able to, to take care of those. The second point that I have there, Ken, is this plus or minus equation, right? That unlike a minimum, because I've heard people say that they'll say, well, a benchmark is exactly the same thing as a contract minimum. I say, well, no, it's not, because a contract minimum is just that. The minute you start printing more, you get charged for your extra cost per page, right? With the benchmarks, if you put that buffer in, whatever it is, if it's 5% or 10%, that the customer won't see any overage charges based on that. So it's a grace area, if you will, right? And I really like that, Ken, is just building that in. I learned that lesson speaking with managed IT providers, and when we first started looking at flat rate, God, I don't know, 7 years ago, and I was so intrigued by the managed IT world, and said, how do you not give your customers extra bills? And they said data. That's it. Because the one thing you don't ever want to do is go back to a customer and give them another bill when you said you're not going to, right? So use the data, have that buffer, to be able to give yourself that flexibility. And Ken, as you said, most times it's kind of like toner coverage, how terrified people were of that in the old days for, doing cost per page, especially color. It just never happened. And I'm not saying it doesn't happen, because it does, but it's a rare occasion that it happens, right? It's not the norm. So overall, the health of the program is not affected by some of these smaller, variances, right?
Yeah, I think that in most cases, you're not even going to notice it. Like I said, I think if anything, you're going to see that it falls on the lower side. Yeah, will you occasionally have a single user that will go and print something above and beyond? Yes. But when you look at the average over the course of a year, the odds that it's significant are going to be very, very small. And if you've built your contract right, then it's not going to be a problem. There are a couple options if something changed significantly in their workflow, and you cover that with a fair use clause. And there's a couple of ways that Wes loves to talk about how to fix it.
Yes, absolutely. And what's interesting is like these two things that I have here below are people in the real world that are actually, doing flat rate, and this is how they tackle those problems, right? And one of them, a very simple one, is to have that 13th invoice, which can, take care of any variability. And Ken, as you mentioned, the 13th invoice is something like you want to talk about, sort of under promising and over delivering. Have a customer expect this 13th invoice and then not get one, right? So Ken, you mentioned it earlier, right? Like using those quarterly reviews to keep them on track, right?
That's right. And and I love that. And for those that have been through my service training programs that I offer through the BTA, that is one of the things I stress, because there's nothing that will make a customer more testy or unhappy than over promising and under delivering. But if you flip the switch on that and you under promise and you over deliver, you're going to have customers that love you. And that's the part of this program, is to cement your relationship with the customer and keep them in love with you and in love with the way you do business.
Yeah, agreed. So, have it in the contract language, but certainly do everything in your power to make sure that you don't deliver it, right? And those that are really successful with it and have that customer loyalty, that's what you do. But nonetheless, you can pull that trigger if you need to, and especially when it's known up front. But really, just make sure that you should do in those QBRs, which is keeping your customer on track, and hopefully selling them some other things, right? That's the beauty of this, is that we've talked about this, that flat rate is not just a vehicle for you to make more money in managed print. It is a launching pad for you to start offering other, flat rate things, right? So, avoid the 13th invoice, by doing good management and a good assessment for your customer. And, when you ask for other things, then, they're going to be much more likely to listen to you and, use those services, right?
That's right.
Yeah. And, Ken, some dealers, don't even do this 13th invoice. What they'll do is they'll actually move any of those overages into the next year of the contract. And this is quite intriguing, actually, because I hadn't really thought about, this one before, sort of on my own, until I was speaking with dealers that do it. But what's really nice about it is that it's not usually that much. So when you're adjusting the seat price for year 2 of the contract, that If, let's say, for example, they had some periods where they were under, some months and everything else, you may get to the point where those overages are going to be very small and not actually have that big of an impact on the overall contract, right? So that is another option, is just to be able to, on the anniversary of the contract, instead of giving a 13th invoice, just readjust year 2 pricing, right? And odds are at that point, what you're going to do is adjusting year 2 pricing anyway, if you can find other ways to make them more efficient with other things that you're selling them, to move that price down, right? And that's the beauty of it, is in your business model, is to start looking at high margin opportunities that will replace any lost revenue on the print side, because it will actually inspire you to help the customer to print less. And you want to talk about keeping a customer happy, show them that you're willing to do more to help them, to be more efficient, right?
Well, and again, I'm such a huge fan of bundling. We talked a lot about it during the 10-day event. And for those of you that didn't get a chance to see it, there are some ways. You can go to our website and you can pay $299, or excuse me, $239, or you can go to the MPSA and join that and only pay $200. So that's a good deal. But there's a lot of teaching. That wasn't the 10 days worth of us selling. That was 10 days of us teaching dealers what you need to know about this. But once you start to bundle any other service with it, and I tell people, I don't care if it's water, I don't care what it is.
Yeah.
You bundle something else with it, now your purple cows become more purple, and your competition's offer has become more monochrome.
Yeah, it becomes like
a whole thing where it's black and white. Now we just got black.
The cow becomes electric purple.
Yes. And your competition purple can't reverse engineer your bid, and you just get stickier. And if you take it to the ultimate, you have their network, you have their phone system, whatever else, and guess what? They're never going to leave you, because the pain of leaving you, unless you could, I won't say you couldn't mess it up, but if you do a good job for your customer, the pain of leaving you is so high, and the odds of finding a vendor that can match your offering is so low that they will be your customers for the rest of their business life.
Yeah.
What more could you ask?
That's one of the, the great things about, the cost per page model for managed print in the early days. That's exactly what happened, right? It was very hard to get a customer dislodged. Like, you'd really have to mess it up. Of course, we're not there anymore. It's so cost competitive, but nonetheless, that's where we are with flat rate, is this opportunity to really, set yourself apart. And again, we talked about it earlier, lead. Don't wait until you lose a deal to it, because by that time, believe me, you've lost a lot more than one deal, right? So, get on board. And we can help with that. So one of the things, Ken, that we do, obviously, is through our training program, our customers get flat rate certified at the end. And I love this credential. I'm going to put up the image here, because you actually did some work, and we got a new page for the website for customers that are looking to get flat rate certified. And the two ways to do that, one is, if you've already got your own program, we've talked about this before, we can still help you. We can test you. We can show you areas in your program where you may want to consider doing different things. And once you hit those minimum standards for flat rate, then you can be certified. And Ken, I love that, that one of the things that we're trying to do is to make sure that there is this level standard. So when someone says, give me a flat rate quote, that they know what they're going to get, right? Because Ken, you've seen it, I've seen it. People really complained about some of the flat rate programs early on, because they actually weren't flat rate programs. They were kind of, cost per page programs, just done a little bit differently, right? And so that would be frustrating as for a customer to, think you're getting a flat rate quote, only to realize that no, the devil's in the detail, right? So exactly. This program, you did a really nice job, Ken. I'm excited by that, but I think dealers can get, signed up on here right now, right?
It's live. They can start signing up for evaluation.
Nice. So we charge $500 for the first year. And again, it's not a moneymaker for us. There is a cost associated with running the system and the credential. And in the second year, that's offset by, quite a bit, because it's only $200 a year to, to renew for that credential, right? And you do get use of the flat rate certified logo, which you see on the left in your marketing materials, et cetera. Again, it builds that customer trust we were talking about, and then the continued support from us. So West and Ken will be at your service. So if you're looking at adding anything to your offering, or if you're looking at modifying, something, we'd love to, help you review that for you to, to make sure that you stay, within the boundaries of the flat rate certified credential.
Yeah.
So get in touch with us.
Yeah, because our goal is, we like the model, we believe in it, and we love dealers. I retired 3 years ago. You couldn't tell for what I'm doing, but everything that I do, like I said, I teach for the BTA. I work with Weston on this, helping dealers get certified. It's because we like to give back to the community that's taking care of us, and we enjoy the business.
Yeah, and it's fun again, right? I mean, that's one of the things I hear from people all the time. It's fun for us too, that when dealers start engaging this, and the sales reps have a new way of approaching their customers, it's fun again, right? So we are having fun. So have some fun with us. Get certified. Hey, next week is, people aren't going to hear from me quite as much as they're going to hear from you, which I think will be a welcome reprieve.
Oh, I don't know. I always get my 2 cents worth in.
It's true. But yeah, so for everybody that's watching today, we will be setting up the event on LinkedIn. But next week, we'll be talking about service considerations, because there are things that you have to be aware of, and nobody knows these better than Ken, and opportunities as well, right? So looking at your service arm to be able to make sure that your flat rate program is the best that it can be. And a lot of people do overlook the service side. So it's really good that, Ken is here to be able to make sure that they have the expertise and the knowledge to do things right.
Yep, because it's like a unified package, and when you get every piece of it right, like I said, it's a cash machine.
Yes. Hey, Ken, I love doing these with you. So we're kind of at the bottom of our hour now, or half hour. So thanks to everybody who joined us again today. And make sure you book your calendars for next Wednesday, which is June 16th. Believe it or not, that'll get us midway into the month and talk about service. So, Ken, all the best.
You can set it up as a recurring appointment, and that way it'll always be on your calendar. You don't have to worry about it.
Yeah, I mean, that's what I do, right? And then I know, because for everybody out there, like, you can count on it. Every Wednesday at 11 o'clock Eastern time, Ken and I are going to be here talking about flat rate. So if you don't like flat rate, avoid 11 o'clock. If you love flat rate, we'll see you next week.
See you next week.
Cheers, buddy.
Bye-bye.